Okay, it's recording now. Let us continue. Thank you very much. Ivanka can come back. I don't know how to tell her. So now that will be your accounting accuracy. Then we come to completeness. Completeness means all transactions pertaining to inventory and production site have been taken into consideration in your reporting process. Right. So the other question is now, the question is what will be the financial reporting consequences should a control objective fail? So what will happen is that you'll either have over or under statement of inventory for both validity, because in validity will be having fictitious transactions being recorded, and once that happens, there will be some modification of the report. Then accuracy, also there will be over or under statement of inventory, because the values that you are taking are not accurate. You haven't taken into cognizance your adjustments and so on and so forth. Completeness as well, over or under statement of inventory, meaning you haven't taken all the transactions in this cycle and resulting in some transactions having been left behind. Then you'll have your inventory stated, understated or overstated, because you have actually put in transactions that they actually don't belong there, or you haven't put in some adjustments that needs to be put in there because you haven't done your reconciliations and your records are not sequential, right? That is consequences for not actually achieving the control objectives. So how do we achieve control objectives within the cycle? So you can achieve those through proper information systems, including accounting systems and internal controls. Internal controls can either be manual or computerized. So let us look at examples that has been stated with regards to validity in a broader manner. So with regards to validity, you are worried about, the controls are more concerned about fictitious transactions are not included in this particular cycle as inventory, because they tend to dilute or they tend to cause misstatements in this particular cycle. So what you need an approval of all transfers and adjustments. You need to have documentation that has been sequentially numbered and approved accordingly. On frequent basis, you need to do your stock counts and your reconciliations to ensure that your stock is in accordance with what is physically being realized through your stock counts, and reconciliations are done to see if all the adjustments that need to be made are actually taken into cognizance. So with regards to accuracy, you need to look at the system of internal control, needs to look at correct quantities and amounts are being recorded, and most importantly, mathematical accuracy of all transactions pertaining to this cycle. Completeness, we need to look at sequential numbering of documentation and checks. Your inventory counts should be done on a frequent basis, and we also deal with reconciliation to actually see if we have actually accounted for everything within the site. Right. So let us look at the link between the control objectives in the cycle and the management assertion. Control objectives being your validity, your accuracy, and your completeness. So firstly, we look at control management assertions relating to cost of sales. So management assertions will be supported by the transactions really occurred. So the cutoff within a particular period. So there will be a cutoff so that we don't take into cognizance transactions that took place after a particular reporting period. So actually purchases did take place. So that would be your assertion by management with regards to validity. I think I'm moving too fast. Moving too fast. Right, with regards to accuracy, have we classified our cost of sales correctly? Classifying cost of sales correctly is taking something out of your inventory and matching with goods that have been actually sold out to our customers. And the cost related to those particular goods will form part of period cost known as cost of sales. And accuracy, mathematical accuracy, and are we taking, management is saying we've taken all the necessary cost and cost allocation with regards to our production correctly. And we're showing that in the form of purchases as well. So completeness, management is saying that cost of sales transactions are complete and purchases are actually complete. So purchases, when they are not sold, they form part of our inventory. So control objectives achievement relating to inventory. So with regards to validity, management assertion will be supported by the existence of that particular inventory and the rise of inventory. So as an auditor, you need to do inventory count with the client, and also check and confirm if the stock items in the client's premises are indeed their stock, because there will be some consignment stock in the premises of the client. You need to get a clear indication that yes, the stock belongs to the entity. So now management is trying, when they disclose inventory in the statement of financial position, they are saying it's our stock. So it's for the auditor to confirm that, and it's valid and it existed. We got that stock through our purchases, or we got it through our production processes. And accuracy, that is valuation and allocation of inventory. So this means our cost relating to production of these finished goods and our cost related to unfinished goods, which is work in progress, and our stock relating to raw material is correct in all respects. That's what management is saying. And if it's correct in material respect, means the values, which is the prices that has been actually being recognized in the reporting processes, are accurate, mathematically and otherwise. Then completeness means all transactions, adjustments, and everything pertaining to inventory and production has been taken into cognizance. So that's what management is saying, and it's for the auditors to review if that is true. And when they do that, they use audit procedures. So now we must look at internal controls in the cycle. So internal controls in the cycle is achieved through documentation and records, authorization and approval, segregation of duties. In fact, segregation of duties could be segregation of compatible tasks. That is your task of initiating the transaction, execution of transaction, authorization and approval of transaction should be done by different or separate personnel. Access controls. We limit access to our stock or inventory to certain individuals, and we control that particular access to all, so that we can have people who are accountable to account in case of differences. That is that has been actually identified by our stock team or any other measures. Number 5, independent checks and reconciliations. We've mentioned that different person will come and maybe on auditors will come and look at the stock items, check the values, check the state of the stock, and so on and so forth, and see and also confirm or give assurance that reconciliations are done. Reconciliation will assist to ensure that any gaps or any stock items that are not physically verified are actually taken out of your theoretical stock or inventory records. So let us look at documentation. With regards to documentation and records, we need to have properly designed documentation that are placed under control, proper stationary control, and used in conjunction with a proper chart of accounts for transactions related to production and inventory cycling. So chart of accounts means we've got consistent account numbers that are used for different for particular stock items. That is chart of accounts that are used in this particular system. And you don't come up with a new one, because if you come up with a new one, it means your amendment or your master file amendment is, you can enter that, is not controlled properly. So you need to control that as well through inventory. So authorization and approval, that should be done by competent people, one authorizing and the one actually approving. Segregation of duties, we've made mention of that you've got a different person initiating a transaction, authorizing a transaction, executing a transaction, recording of transaction, and control over or safeguard of assets involved. Right. So in case of inventory system, we need to have a different person requesting the transfer of raw materials to production, a different person authorizing the transfer of raw material to production, a different person physically transferring raw material from the materials warehouse to factory, recording of raw material of raw materials to production, and custody of raw material once in the factory. So we've got to have different people or different functions doing that. I've alluded to the fact that restricts access to stock to few individuals who are authorized to do so. So your independent checks and reconciliation, you have to have a person who will be agreeing raw materials transfer notes with raw material requisition before authorizing the former. Also agreeing the quantities on hand with those quantities recorded on the entity's perpetual inventory system as being on hand. Perpetual means we are using a stock account, not a purchases account. So you're looking at agreeing actual quantities with theoretical quantities. Then the last one will be checking the completeness of the sequential numbering or the authorized master file amendment forms for missing items and thus incomplete master file amendment. Right. That is your independent checks and reconciliation as internal control in the site. Right. 8.7.2 deals with internal control and deciding. Storage of raw material as a function, production planning, and so on and so forth. This is also called control tables, which you find in the old book. It's 340, and each and every function is actually looked at. So I'll ask that each and every one of you go through this. It's so simple. We'll go through one, and I think the rest will be dealt with by yourselves, and also you get it in your tutorial so that you understand what each of one means. Then let's look at control relating to conducting of inventory counts. Maybe before we go there, let us actually deal with one of these I think I'm Okay, for instance, let's deal with storage of raw materials as a table. You must understand this because they assist you in a case study, a question environment with regards to the risk pertaining to the functional area called storage of raw materials or raw materials warehouse. Okay, let's look at what is happening there. The activity there, 1.1, will be implement physical controls to safeguard the raw material in storage. We have dealt with this one, but now it's put in a table form or so that you understand. They've also included control objectives, risk, so on and so forth. Then now, a person responsible will be your raw materials warehouse manager. We've dealt with this one when we're doing this, when we're doing functions. Documents that are involved there will be your inventory records used for reconciliation of physical inventory with recorded inventory. Then what could go wrong, or what are the risks pertaining to this particular function within the cycle or functional area within the cycle? Inventory could be damaged, thus deteriorating in value due to poor physical conditions or due to nature of inventory. Right. What is the control objective? Control objective, you know, your validity, completeness, and accuracy. Inventory is properly protected against damage. That is your accuracy. So another control objective will be inventory is properly safeguarded against theft. That is your validity. Right. Those are the two objectives relating to this activity under storage of raw material. Then assertion affected, accuracy, valuation, and allocation of inventory. So manual controls, implement proper physical control, for example, solid structure buildings, environmental controls, e.g. PVC resin in powder form should be kept dry, neatly packed. So they are telling us the type of stock items that needs to be taken care of, like a powder one should be kept dry all the time so that you avoid it being damaged. But ordinarily, you need to have solid structure buildings for safekeeping of your inventory items. So inventories could be stolen. B, inventory is properly safeguarded against theft. So the assertion affected is existence of inventory because it can be stolen and doesn't exist if it's stolen. What could be your manual controls? Implement proper physical controls like access controls, e.g. locked, restricted entry, minimal entry and exit points into the warehouse, surveillance camera, and security guards to actually safeguard against theft of stock, which affects existence of stock. Then you can also have a computerized system. So access control to gain to raw material warehouse, such as a code for lock on the door to raw materials, biometrics devices, restriction entry or access to raw material warehouse. So that is the structure that the controls, the linkages are taking throughout all the functional areas. Then the next functional area will be your production planning. To do the same, look at the person activity, responsible entity, documentation needed, what could go wrong, control objectives, assertions affected. Then you look at manual as well as computerized control throughout. So you need to go through this and understand it. We've done it, but now it's in a table form or a table format. So it will be much easier for you to deal with it. In case you don't understand, you have to ask your tutors. In case you don't understand, you're going to come back to me. You must have a session so that you actually understand what is actually taking place there. But we have alluded to all those, we've dealt with them, and I'm actually happy that we've covered everything. Then now, let us look at controls relating to conducting of inventory counts. So we look at planning of the inventory count. So your inventory count should be planned such that you have your documentation, who's going to do what, and you have to have a floor space, where is the stock kept, have to have that map, and appraise all the teams that will be actually counting. They should be supervised, and so on and so forth. Conducting inventory counts. So the inventory count should be done on a stationery that has been pre-numbered. Those sheets should also be monitored, and the supervisors should do what we call spot checks on the stock count sheets to see if everything balances. So once all the issues pertaining to adjustments that need to be made, the final inventory count should be done, and a final inventory count sheet should be then sent to inventory clerk for comparison to the quantities recorded in the physical inventory records. So that is where your reconciliation is done between physical and theoretical inventory records. So physical means we've done the stock count so much, but our IT system or our computerized environment is telling us a different story altogether. You reconcile those and you pass necessary journals. Right. Any question with regards to inventories and inventory counts? If there are no questions, inventory counts still play a major role in ensuring that our stock is not, we're holding stock that is not obsolete, holding stock that is there, existence of the stock is actually properly valued. Adjustments have been made where they're supposed to be made. Auditors are also interested in this particular control to actually ensure compliance with IS2. Right. Time now is 3:31. I think because the system took me out and certain lady became a host, but we will have 2 recordings that will be sent to you pertaining to this chapter. Do you have any question that we can deal with now? If there are no questions, we left with 10 minutes. We can close off, and I think this was the last lecture. I'm not very sure from me. If it is, wish you all the best. And some people have already passed this particular course. We wish them well, and till we meet again. Thank you very much.